Today's lesson is aimed at BCom second year students of B.R. Ambedkar Open University. The unit for today's discussion is drawn from block 4 of Money and Banking course, and the unit is titled as Central Bank and Credit Control. Now, this particular unit is drawn from banking, particularly relating to central bank. It is actually aimed at clarifying certain of the doubts the people may have as to how a central bank can really control the credit available in the economy. As you all know, in almost every country there is the apex bank or apex of the banking system. We find one bank which is called the central bank. In our country, this central bank is known as Reserve Bank of India. The central bank regulates and controls the whole monetary system in the country. It also plays a very active role in implementing the government's monetary policies. Now, central bank is a symbol of financial sovereignty and stability of the country. The main object of the central bank is to promote economic development and strive for the economic stability in any particular country, and India cannot be an exception to this, nor can central bank be an exception to the general rule. Now, it is the highest monetary institution in the country, charged with an important responsibility and duty of maintaining financial and economic stability by performing certain of the important functions like issue of currency notes, acting as a banker, agent, and in times of need even as an advisor to the government of India. It acts as a custodian of the cash reserves and the foreign exchange reserves as well. Now, it also acts as a lender of the last resort, and last but not the least, it acts as a controller of the credit available in the economy. Now, this is the last function with which we are probably concerned with as far as the today's topic for discussion is concerned. Now, the credit created by the commercial banks constitutes a major portion in the total money supply in the country. Now, it is possible that the commercial banks either intensify inflationary pressures by expanding the credit, or they might as well create or contribute to the deflationary situation by contracting credit. Now, both are not exactly wanted, nor are they inevitable. Sometimes they may be. It only means that there is a clear need for someone stepping in controlling the credit available in the economy. From this it is clear that there should be an authority which controls the credit available in the economy, and by controlling the credit created by the commercial banks. Now, it is the central bank which controls the credit created by the commercial banks. Now, in this background, we would have the benefit of the expertise of the two subject experts I have with me in the studios. One is K.Koteswra Rao, is a professor in the Department of Commerce, Dr. B.R. Ambedkar Open University, and is also a director, Center for Staff Training and Development at the same university. I have another resource person with me who is sitting to my left, Mrs. Bimala B. Madan. She is right now the Assistant General Manager of the State Bank of Hyderabad. Now, coming to the subject matter of discussion, Professor Rao, it is often said that the money creates credit and credit creates money. Now, in this background, would you explain the need for credit control? We are not talking about credit creation, but the focus should be on the credit control. Now, Professor Rao would enlighten us about this.
Sure. Yeah, as you rightly pointed out, the functions of the central bank, and especially the credit control power by the Reserve Bank of India or central bank, how it uses that method for increasing the volume of credit or decreasing the volume of credit. At this juncture, there is a saying that commercial banks are not merely traders of money, but manufacturers of money. That means they create credit, that is what is called manufacturing of money. This creation of credit sometimes may exceed the limits, and this excessive credit would lead to so many consequences like inflationary situations and speculation activities. There is a need, some organization should control this excessive credit created by the commercial banks. That is the apex bank of any country.
Yeah, that's fine. People usually feel that it's of course true. There are different methods by which the commercial bank credit is controlled by the central bank of the country. Now, what are the different methods by which the central bank controls the total volume of the credit created in any country?
Yes.
Mrs. Bimala Madan.
The primary functions of the Reserve Bank of India, which is our central bank, is to ensure a stable economy, to ensure the containment of credit, to ensure availability of credit, to ensure that this credit, the flow of this credit is properly monitored and that it reaches the right people, the right users. For these, they have put in place what we could say two kinds of controls: the quantitative credit controls and qualitative credit controls. As far as quantitative credit controls, by these we refer to the statutory requirements. For instance, you have the statutory liquidity ratio, which is presently 25%. You have the cash reserve ratio, which is presently 7.5%. The Reserve Bank has put in place certain exposure limits. That is the exposure that a commercial bank can have to an individual borrower, to a group borrower, or to a particular industry. They also have stipulated a certain credit deposit ratio and certain norms to whom the credit must go and to what extent, rather to the quantitative aspect is to what extent the credit should go to various areas. The qualitative aspect would be to ensure that the flow of credit by way of various selective credit controls, for instance, by which the central agency would control speculation or hoarding. We have various supervisions, direct supervision by the appropriate regulatory authorities. The Reserve Bank itself supervises, and you have various supervision tools put in place by individual commercial banks.
Okay. Now, we were actually discussing something about the different methods by which the central bank could control the credit available in the economy. Now, would you throw some light on the quantitative control methods, which are otherwise known as general credit control methods? Professor Rao.
Yes. Madam Vimala has rightly pointed out how the present banks are using the various quantitative and qualitative methods for controlling the volume of credit and the monitoring of credit for productive purposes by channelizing the credit to different sectors as per the government policy. Now, let me explain these things in brief. If you take the first category, that is quantitative credit control methods, they are otherwise called as general credit control methods. These credit control methods are aimed at controlling the volume of credit irrespective of the purpose of the credit. And these credit control methods include bank rate, open market operations, and variable cash reserve ratio. These are the three quantitative methods. Let me explain each of these methods in brief. If you take the first one, that is bank rate. Bank rate is the discount rate at which the central bank rediscounts the bills of exchange of commercial banks and also grants loans and advances to the commercial banks. And the second method, that is open market operations. This is nothing but the purchase and sale of government securities or other approved securities in the open market by the central bank is called open market operations.
I've got a small
Please,
supplement.
please.
In fact, what do you think are the situations under which the government would resort to, or the RBI would resort to this kind of method of control?
Yeah, you
That's
see,
open market operation. When does it really buy and when does it really sell?
yeah, if you look at the trade cycles, we get one time we get the inflation, and the other we get the deflation or depression, recession, recovery, like that the cycle goes on. If you take the inflation, then we have to reduce the volume of credit. Then it sells the open market securities. That means it takes away money from the open market.
Right.
During the times
So,
of depression, naturally the volume of credit should be increased.
So it only acts as a stabilizer as far as
Yeah.
the volume of credit available in the market is concerned.
Yeah, it has to maintain balance in the economic situation. Otherwise, it reflects on the price stability, as our madam has rightly pointed out. So, a stability should be maintained in the economic situation.
Controls the market.
Yes, control.
Yeah,
The point is when it feels that there is an excessive credit created by the commercial banks,
definitely.
it sells the securities and mops up all the resources from the market.
Yes,
That's
yes.
right.
If it is the other way, probably it
Yes.
buys up all the
Releases.
things. Right,
Yeah.
fine. Okay.
And
You were referring to the third point.
Yeah,
that is,
when you look at the
variable
card method,
credit reserve ratios. Fine.
yeah, this is the minimum cash reserves that are to be maintained by the commercial banks at the central bank. So that is called as variable cash reserve ratio, and this ratio would be increased from 3% to 15% in the case of Reserve Bank of India, because by varying the cash reserve ratio, the Reserve Bank of India could be able to control the credit created by the commercial banks. Again, if you go back,
You
to
were
the-
actually making a mention of that. Right now it stands at 7.5%.
Yes.
yeah, that is,
right.
yeah, minimum is 3%.
3%.
It varies between 3 and 15%.
Right now it stands at 7.5.
Yeah, you see,
Because
in-
recently in the latest credit policy, it was brought down from 8 to 7.5.
yeah, that means when it is reduced to 7.5 from a higher ratio like 9% or 10%, that means the Reserve Bank of India wants to create more reserves at the disposal of the commercial banks, liberalizes the credit policy, and see that the commercial banks have to lend more money to the right persons for productive purposes. These are the various credit controlling methods
Yeah, there is every
of
danger.
quantitative in nature.
There is every danger, at least the viewers jump to the conclusion that everything is good about this general kind of quantitative credit control techniques. Now, each weapon has its own limitations. Do you think, Mrs.
Yes,
Bimla, I mean, do you think the quantitative credit control methods have any limitations at all? If they have some, what are they?
There are certain limitations. For instance, now this open market operations, resorting to open for controlling. For that, there must be the expertise must be there to take up such open market operations. That is, in other words, there should be a well established open market environment. Certain countries that are not very, less developed countries do not have such an environment. The same way for the bank rate will be ineffective.
No, you were mentioning that some of the countries are not well equipped. Do you think India is well equipped in terms of open market operations?
India, yes, India is fairly well equipped. We have been having some hiccups here and there, but we've been learning, and that is the reason I would say that we have been fairly stable in the Asian region. We have been very stable where other so-called much major, those Asian tigers for instance, they fell by the wayside, but we managed. We were, of course, there were other reasons also that we were more cautious, but it paid off.
Yeah.
Would you not say that,
right. You are rightly
Professor?
pointed out, in the case of India, it's faring well when compared to less developed countries, but there is a need to improve much in the case of these credit controlling weapons when compared to developed countries like USA, UK and other countries.
Okay.
Then here again, another reason, another point I would like to make is, I suppose because we are still a developing country, not yet, as we say, not yet among the top, there are certain stipulations, priority lending norms for instance. These have been laid down, these controls have been laid down by the Reserve Bank. With this, what has happened? On the one hand, we are social bankers, we have to raise the level of the economy, raise the level of the standard of living of the people. But at the same time, it has tied our hands in lending more effectively. So because many of the priority lending or the schematic lendings have turned sour.
The credit control methods do have certain limitations.
They do have, right? They do.
Okay. So far we have discussed something about the quantitative credit control methods, and this only implies that there exists another set, the other side of the control mechanism as it exists today as far as credit control is concerned. Okay. We do have the other side of the coin.
Definitely.
Then the opposite of quantitative must be qualitative, if I'm right.
Yeah.
So would you kindly tell us something about these methods which are qualitative in nature?
Yeah, naturally, you see, Madam has pointed out certain limitations on the part of quantitative credit control methods.
Fine.
And I wish to add some more limitations to those quantitative methods. Like you see, we can't use the bank rate on its own. If we use that bank rate alone, it may not serve the purpose efficiently. Then we have to use that bank rate in combination with other methods, either the methods of quantitative credit controls or selective credit controls, or sometimes see our money market is different, the structure in terms of structure when compared to the developed countries, as I pointed out when the discussion is going on. And you see, now let's come to these qualitative credit control methods. That means quantitative credit controls are not completely failed, but to some extent they are usable. And because of the limitations of quantitative credit controls, qualitative credit controls have come into existence. And the aim of these qualitative credit controls is mainly to control the credit by diverting the credit to the required channel for the productive purposes. That means, I told you, when we use the quantitative credit controls, it doesn't differentiate between the productive and unproductive sectors. It reduces the volume.
No, what do you think is the basic nature of this qualitative control
Yeah,
mechanism?
qualitative means...
Is it more of a positive mechanism or is it a negative mechanism?
Yeah, it's positive mechanism when compared to quantitative credit control methods. Why? Because we can differentiate between the productive and unproductive. See, if you take our own economy, we have different sectors of economy.
So it's only a question of getting all your priorities right. It's only a question of getting your priorities right. Fine.
If we want to divert the credit to the priority sectors, we can make use of this we can make a distinction between the other requirements and the private sector requirements.
Yeah.
So that we, by using these qualitative credit controls, we can divert the same when compared to the quantitative methods. And now, if you look at the instruments, there are so many number of instruments, as she pointed out in the beginning, that moral suasion.
Moral suasion, fine.
Yeah, that's one thing. And the direct action, as she told, that Dena Bank has, the chairman of the Dena Bank was asked to give explanation about the losses that is incurring. Nowadays, the banks are very transparent. Bank activities are more transparent. They are answerable to the public. So that way, that's why the chairman of the bank is asked to explain why it is incurring losses.
What do you think are the other qualitative?
If you take moral persuasion or suasion,
Moral suasion.
direct action, rationing of credit, regulation of consumer credit, publicity, all these things are qualitative credit control methods. If you take the first one, that is moral suasion, it's nothing but persuasion by the central bank that the commercial banks have to follow the monetary policy that is in existence. So that persuasion is called as moral suasion.
Fine. Okay.
It's not by law or by order, but through persuasion it could be able to done.
Right.
And if you take the direct action, if the commercial banks are not in conformity with the monetary policy or guidelines given by the central bank, then it resorts to direct action. Direct action in the sense, as she told again, Madam Madan has told that it may be limiting the total credit to the economy or to the particular sector or to a particular bank or to a particular individual. These are all the different forms of direct action.
There are various others also, for instance, other restrictive,
Yes.
Punitive measures,
Right.
such as revoking a license, not allowing a bank to open more branches.
Naturally.
These are some of the
Yes.
things which are now very much there.
Okay.
Yeah.
Now, as quantitative credit control methods, as we have seen, had their own limitations. I showed you the qualitative measures of this thing. Do you think the qualitative measures also have a certain amount of or certain number of limitations?
Oh yes, as bankers we do see that also. The controls are there, they are there to give us direction. But we also see the weaknesses. For instance, I would say these small private banks, these private chit funds, these non-banking, so many other non-banking finance companies, they have a lot of credit, lot of money, funds available with them, but they do not come within the ambit of Reserve Bank's controls.
Yeah.
Now they have started coming, and because of that you see so many chit funds failing.
Yeah.
There are two aspects to it. One is because they do not have these controls, they have been playing around with public money.
Right.
And the other is because of the controls they are not able to survive and they are going under their sinking. These are, this is a very real aspect, but now more and more they are also come into within the ambit of Reserve Bank's control, and it is only the strongest who will survive. Cooperative banks also, you have seen very major cooperative banks who have stunned everybody, they have stunned everybody by failing. Recently you have heard of the Madhapura Cooperative Bank.
Cooperative Bank,
Yes.
right.
There are many others, and now only the strongest will survive, and those are required to follow the directives and the controls laid down by the Reserve Bank.
I think the situation is such that the dictum survival of the fittest rules.
That will have to be, especially with the competition and the new banks coming, the foreign banks, even well established national banks like mine, like the State Bank, the entire State Bank group.
Fine.
We all have this competition to face, and here a major strength will be our adherence or our following the controls laid down, because these are directives, these are directions, these are guidelines. Then another one is Professor Koteswra Rao was talking about the selective credit control. Now, while these were there earlier, the selective credit control covered various commodities, for instance rice, wheat, but now because we have buffer stocks, we have plenty, they have been removed from within the control of selective. You still have now, there are a very few items like sugar, like cotton, but then how do we control these to prevent, as I said, to prevent hoarding, to prevent speculation.
Right.
You restrict the amount of credit, you raise, increase or lower the margin. These are various things, but even then I would say it is not easy, in spite of these, to control the prices.
We were actually discussing something about the quantitative credit control techniques and credit control methods, and the other side qualitative Now, which of these two sets of methods is more popular, effective, or maybe as far as credit control in India is concerned, and why are they so effective?
Yeah,
Would you tell us something about that?
Yeah, it's a difficult question to answer. Why? Because there is no question of popularity here. But the thing is, they have been using the both quantitative methods and also qualitative methods in India. But how far they are successful, that we have to discuss here. If you take the bank rate policy that is adopted by Reserve Bank of India in India, to some extent it's serving the purpose, but not fully when it is used exclusively for the purpose of controlling the prices, as she rightly pointed out. But unless we use it in combination with the other quantitative methods like open market operations,
Yeah, right.
or variable cash reserve ratio, or some of the credit control, selective credit control methods, then we get the required results.
Thank you so much for clarifying certain of the maybe questions which remain unanswered for quite a long period of time. Something like what are the different methods, and what exactly is the place of Central Bank of India in our country, which is called Reserve Bank of India, and what does it actually do as far as credit control is concerned, because if it is not controlled properly, it might lead to inflationary situation, otherwise it may cause some kind of a deflation and kinds of things like that. Thank you very much, madam.
Thank you.
Thank you so much, Professor Rao, for being with us.
Thank you.
Okay, thank you so much.